Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are here with another episode of understanding what's happening globally as well as on the domestic side and decoding them into the several currency pairs. So, starting with the domestic side, obviously, the heartbreaking number was the GDP number, which came at almost around 7 quarter low to the tune of 5.4%, vis-a-vis the expectation, which were quite higher to around 6.5 to 6.6 as well. Now this keeps the RBI into fix because the lower GDP data, that to massively lower, calls for a rate cut by RBI. But on the other side, the RBI is also fighting the elevated inflation as well as the global uncertainties which are prevailing. So I think it remains a difficult decision. But for me and my analysis, I think there may be a pause for this month, and maybe they may look forward for once the Trump administration is completely into place after 20th January. So maybe the February policy may be eyed for any kind of rate decision which is decisive. So a pause is expected as per me. If I talk about the Fed policy, we have it on 18th of December, wherein if we talk about the data points, the jobs data has been solid. The PMI data have been also decent enough. There's a stronger data has been pushing them for a rate cut. So 70% of the probability still remains of a 25 basis rate cut in the policy, where my personal opinion also remains of a 25 basis cut in the December policy. If we talk about again the domestic side, the fiscal deficit number for India till the month of October, we can say came at around 46.5% versus it 45% in the same period last year. So I think that's again a concern. Talking about flows for the month of November, we saw flows, which is particularly equity flows, negative to the tune of 21,600 crores. While if we talk about the month of December, at least we got some positive start to the tune of 2,800 crores. But again, it's still a long month to go from here on. So let's see. And the outflows usually prevail in the second half of the year historically, where the money is pulled back due to the year-end closing. So that may be watched very closely. On the FX reserve front, we have seen that aggressive FCA revaluation plus the intervention has been causing the FX reserves to drop to the tune of $656 billion. I think that is also a reflection of how dollar rupee has fared, and we have seen some depreciation in INR as well to the tune of 84.70 odd levels. Recently, a high of 84.76 to be precise. The trigger point definitely was the BRICS, where the statement remained by Donald Trump, which stated that there can be 100% of tariffs if the BRICS are going against the dollar or maybe finding a new currency for themselves. Why it's more important to focus on BRICS? Because there are several members who are joining, and 34 members are also in line to join the BRICS. So there is some kind of threatening of de-dollarization which continues. But per se, I think it's a long process. China has been trying this since past 11 years, has got no success as of now. So I think it's still a long way if we talk about de-dollarization from here on. If we talk about what's important here is obviously the inauguration, which will happen on Jan 20th. That would be a trigger point of how the financial markets shape from there, in terms of how are they actually working on the lower taxes and higher tariffs, which they have said now, because are they really implemented? If yes, then obviously it can create a lot of volatility into the financial markets. Talking about the dollar rupee pair, we have seen the levels now trading between 84.55 and 84.80 broadly. I think what we have seen in the past couple of months, a slow, steady depreciation into INR and finding a new range and trading into that range for some more time. My opinion, again, my analysis would say that we would continue to see this slow, steady depreciation even from here on, with the base now acting as 84.35 positionally, while immediate resistance can be seen at 84.90. We have seen 84.90 levels in the NDF, though it is not tested on the onshore, but I think it's an important resistance to watch out for. So that's all from my side, friends. Thank you so much for your time and hope you find our insight insightful. Thank you.